Okay, so we know we've got this right to use asset, this lease liability. We know we've got a couple of exemptions if it's a short-term lease, i.e. if the lease is less than 12 months, or if it's a low-value asset, i.e. it's less than $5,000. If it's either of those two, then you don't have to have a right to use assets. What you can do is you can put it to the income statement instead. Right, okay, now the lease liability, if you remember in a little bit more detail, was fixed payments, they're the easy ones. Variable payments, you include those in the lease liability if there's an index or a rate. A residual value guarantee, you include in the lease liability. A purchase option, you include, and a termination option, you include, and you only include those if it's reasonably certain to happen. Now, what I want to do then, now that we're happy with that, is I kind of want to go through that lease liability in a little bit more detail, step by step. Look at all the individual things that make the lease liability. And once I've gone through all of those, we know that that figure there, that then starts us off on the right to use asset, doesn't it? And then we add on things to that as well, such as restoration costs, etc. But I want to focus on this lease liability first.